Welcome to TheoTrade. This is Don Kaufman. It's June 7th, 2024. It's Friday afternoon, just about 15 minutes to go to the cash close. S&Ps, well, right now they are massively unchanged. I tell you what, they're not necessarily unchanged on the week. Take a look to begin with here at the SPX. Well, the mother of all products. Where are we right now on the week? Well, we're pretty much riding right into the upper edge of the expected move, which is something I talked about extensively on Wednesday evening's video, that we would probably kind of ebb and flow and, if you will, like kind of reverberate around the upper edge of the expected move. I literally said, look for this line, and that line, okay, is none other than 53. Again, it's 53, okay, 39. And called on Wednesday for us just to kind of flow a little bit around it. And that's basically and effectively where we are right now. Again, with about 15 minutes to go to the cash close. Yeah, it wouldn't surprise me to see, like, let's pull back right to what I term the happy place. That has everything, though, to do with hedging activity. So on this weekend's update, we're going to discuss, well, the great Nvidia squeeze is almost dead. I'm actually going to explain some what I would think are considerable concerns moving forward if Nvidia, okay, can actually move markets similarly to what it's done. And for those of you that have actually missed some of the statistics out there, Nvidia does effectively account for approximately 50% of the returns in the S&P 500 on a year-to-date basis. So first of all, let's actually throw Nvidia up year-to-date. It is up, roughly speaking, let's just round it 150% on a year-to-date basis. Meanwhile, the spiders, look at the spiders, up 13%. All right, one of the first things that I want to point out before I go into, the great Nvidia squeeze is almost dead, and actually explain some of the concerns in there, before I get there, I want to mention there's big time two-sided trade this week, and that's the kind of stuff that's what I look for. I love. But the two-sided trade, with all these divergences, it's everywhere but the S&P, okay, but the QQQ. When I talk about two-sided trade, all I'm basically referencing, I think to break it down to the most easiest context, I'm actually going to bring up the expected moves, not to the point to let's show you the expected moves. Look, what I'm showing you is what the week look like. And again, like if we start here in the spiders, what do the spiders look like? Well, we started right here and then we went to the expected move. I'm just showing you, okay, so the S&Ps traded a bit to the upside. But look around at other individual products and look around at other sectors. I'm actually going to start with the energy sector, because the energy sector, like it's just shocking at this point, because when you see a sector in the S&P 500 like energy smash outside of its expected move, and again, you're almost at a 2 deviation move lower in energy. And that's why I'm bringing up expected move over here, just to kind of give you a reference point of like, yeah, we started here at 93 and change, and we're finishing the week, down substantially on a percentage basis. Thing got hammered, right? But it had unequivocally no bearing whatsoever to the S&Ps, because the S&Ps at this point, and it's the point I continue to make, are just owned right now by big tech. Speaking of big tech, right? You look around at big tech, and again, I'm talking about two-sided trade is everywhere, and that two-sided trade, stuff that goes higher and goes lower. You look at something like Microsoft. You realize that Microsoft, last week smashes lower. Earlier this week was considerably lower, and is actually going to finish, well, to the upper edge of its expected move. You look around at Apple, Apple's the upper edge of the expected move, right? Amazon, just an absolute ripping week, There's not much, if you will, two-sided trade in big tech. You look at big tech, generally speaking, their upper edge of the expected move or smashed through it, other than maybe Tesla, which will finish the week unchanged. Okay. Netflix, which will finish the week unchanged. But again, generally speaking, big tech, okay, rallied. That unto itself is the S&P 500 at this point. But then you start to look at like some of the financials. The financials throughout the course of this week were on the lower edge of their expected move. They're doing exactly what they should have. To the downside, they rebounded a little bit today, but they're still going to finish the week lower. It is just, almost awe-inspiring to me to see major sectors of the S&P 500, okay, have this much of a divergence and not impede at all upon the progress of the S&P 500. I mean, you got a sector like financials and energy, okay? I mean, there's a lot of different sectors in there, but it's tech and more tech, and that's it. Because as I've explained time and again, Nvidia, okay, it doesn't trade like a $3 trillion behemoth. If it's volatility adjusted, it trades more like a $7.5 trillion behemoth if you compared it, okay, and normalized its volatility, which again, I'll come more to Nvidia in just a moment. And, the other thing I don't like to do right now is, you can characterize this marketplace in many different ways. And I say the whole market, the S&P 500, it's a bull market, it's a bear market, it's this market, okay? But there are plenty of stocks out there that, again, that are seeing just wild two-sided trade. And I always bring up Starbucks. I've had a lot of positions, a lot of profitable positions in Starbucks recently. Starbucks down, some 13%. Another very profitable position I've actually had was in Lululemon. Ironically, okay, my earnings trade, which was bullish, okay, played out really nicely. But like Lululemon, to give you another one, there's plenty of products here that are just getting hammered. And of course, everybody's like, oh, you can point out, look, there are some big name products out there. Okay, the performance, like you start looking at stuff like Walmart, this thing got smoked today. It's not impeding upon the markets at all. Okay, again, we're seeing divergences all over the screen, and I've continually pointed out the Dow. And the Dow, it had a degree, okay, of recovery this week, if you can call it that. This week, the Dow will finish almost unchanged on the week. That's about the best you can possibly do. As I said, there's tons of two-sided trade. Okay, so there's a lot of opportunities, but in the index products, specifically the S&P 500 and the NASDAQ, let's actually bring up the NASDAQ here and look at the auto expected moves in the NASDAQ, okay, they're incredibly one-sided right now. They're being influenced predominantly by Nvidia. And yes, Apple definitely had some upside momentum, and Amazon definitely had some upside momentum, but don't kid yourself. If Nvidia starts to break or break lower, okay, it is going to unwind a significant amount of everything in the queues and all of tech. That's when we might see a counter rotation. For example, maybe something like out of Nvidia and into something like Intel. It is very interesting to see that Nvidia is taking the slightest hit, or a couple tech stocks are in the red, and it's interesting to see that Intel is actually bid today. That's not the only kind of divergences that we're seeing on the screen, okay? But that's the way that I'm approaching this marketplace right now, with this two-sided trade everywhere but the index products. Now, the next thing I want to cover, okay, Nvidia. So when you wake up on Monday morning, yeah, Nvidia is no longer going to be a $1,200 product. You're going to be trading $120 stock, and if you do have shares, obviously it's 10 for 1, yada yada yada. So you're going to be trading this $120 stock. But the other aspect that goes with this, okay, the options, they can get all kinds of screwed up for Monday. We'll see how that actually plays out. Now I'm looking further than Monday. One of the things that's really come to mind here is that the float in Nvidia, that's the number of shares out there, which is basically 2.5 billion, okay, is actually going to move a decimal point. It's going to be like 25 billion shares, all right, in the float, which is going to be absolutely phenomenally large. You know, well, there's other stuff out there. Yeah, but take a look at Microsoft over there. It's good for about 7.4 billion in the float. Apple's bigger one, you know, obviously 15 billion in the float. It's going to be a little bit more difficult to actually see the possibility of a squeeze in here. Moreover, the options activity, okay, is going to be dramatically changed. So I'm going to say this again, the options activity is going to be dramatically changed. Okay, first of all, you're going to see trading here, they're going to have to trade for argument's sake, 10 times the number of contracts, okay, which could create issues unto itself. I can go into the float, I can go into the number of contracts that are going to be traded, okay, I can give you umpteen reasons for the trade, though, that is persistent, okay, and the trade that it's actually moved Nvidia could very well dissipate. We are going to be watching very carefully, and I'm going to go into so much more depth about this and the lack, if you will, of the Nvidia squeeze coming into next week. We're going to look very, very carefully, though, okay, at options traded at the ask or above, both calls and puts. Again, you would expect, and I'll just give you an example here as we come into this, 2 million option contracts traded. Now, the reason I mentioned the option contracts specific to Nvidia, that's what got us here. That's what made Nvidia a $1,200 stock. It's not necessarily like mom and pop going out there like, I need a good investment in some Nvidia. It has nothing to do with it. It has everything to do with this squeeze and the gamma squeeze, where if you buy calls, okay, the market maker then sells you those calls, and the market maker turns around and buys shares of stock, and it drives the stock cyclically higher, right? You get locked in a feedback loop, yada, yada, yada. Those feedback loops are going to be much, much more complicated to sustain in what is a $120 product, okay? It is still possible that we're in a gamma squeeze, but I think it's going to be a greatly diminished probability of that squeeze continuing, especially early on in the week. Now, does that basically promote that there's going to be wild sell side activity? Not per se, okay? But there could be some extraordinarily scary moments inside of Nvidia, which of course would reverberate to the entire market. Now, I'm not going to sit here and preach to you at all about different levels because none of that matters. You look at Fibonacci, MACD, it doesn't, nothing matters in terms of levels here, okay? Split adjusted stock, yeah, it's through the split, it happened, okay? Onward. It's all moving forward about the ability to squeeze, okay? Or is the squeeze dead? And that's what it's going to come down to. All right, let's move beyond Nvidia because Nvidia is going to be, a big portion of Monday and Tuesday's trade, of course, next week. But moving on, okay, we have to talk a little bit about some of the price action that we saw today, okay, exclusively inside of the bonds, which got rocked. Bond market gets rocked. Why? Non-farm payrolls. The non-farm payrolls, again, who cares what the number was? It's 272. Like, who cares? It doesn't matter. It's about order flow. Like, it doesn't matter what you think about Nvidia at this point. It's about order flow, right? So you got to look at the non-farm payrolls as nothing more than a catalyst. And the catalyst comes out, the jobs number was incredibly strong, okay, versus what was expected. Significantly, by almost 100,000. They didn't hit the broadside of a friggin' barn with that thing. But, all right, it rocks the bonds. And it also drives the dollar dramatically higher. Look at gold. Got annihilated. It's one of the biggest one-day moves we've seen in recent history inside of the gold product, okay? But at the same exact time, you're looking at this and you're like, the S&Ps were totally lackluster. Yeah, of course, they're waiting for Nvidia. That's it. I mean, that's, as I said, that happens to be your marketplace. That is what is driving people, okay? Everything right now is Nvidia. It's kind of a small world you live in when it's, it's the one stock market. Nevertheless, jobs number comes out, all right? And what's so interesting about this, though, is you have a Fed meeting next week. And to couple the Fed meeting, by the way, just saying that the jobs rock the bonds and it rocked the dollar, it's again, a little shocking that it didn't, per se, knock the S&Ps harder. What we did initially see knee-jerk reaction, S&Ps traded dramatically lower, okay, rebounded. But the S&Ps rebounded, there should be no surprise to that extent because the S&Ps, where are they? Okay, what? We're less than 10 points off of a line that I drew over a week ago? And think about that, okay? I'm just a monkey behind a computer, and I'm telling you right now, these expected moves, okay, They're not important. They're everything. They're everything. I mean, literally, you have a $5,350 product, okay, that missed a line on a screen that some monkey drew like, a week ago. It's a very, very efficient little marketplace. Nevertheless, so jobs come out, rock the bonds and dollar. The only reason that that matters at this point is because the Fed's back. Fed's back, and you go, what? Yeah, can you believe it again? Fed's coming back. By the way, there's no chance, they're not going to raise rates. Okay, they're not going to raise rates. They're not going to lower rates. Yeah, I said raise rates. Okay, why not? There's still inflation. They're not going to lower rates. And with the jobs number being strong, all right, and this is the real kicker. The CPI is actually coming out the morning, right before the Fed announcement. I love this. This is I want a double, okay, with cheese and some volatility. I mean, look, this is just going to clearly be catalyst after catalyst. And what's interesting about the S&Ps this week is you can actually see, and again, we're looking out. When I say the S&Ps this week, I'm actually going to freeze the screen. I know we're coming into the closing bell right now. Doesn't matter. The market's massively unchanged. What I'm highlighting here, specifically inside of the S&Ps, look, you can actually see Monday volatility is like 6%. Tuesday volatility is like 7%. You get into Wednesday, yeah, it jumps to 12, almost 13 vol. Things are going to pick up a lot. I would suggest, okay, that you anticipate a lot more volatility in the back half of next week, okay? But on the contrary, and I think that this is important, look where we're closing here, okay? We're actually, we're going to close on it. This is awesome. That's the closing bell, people. By the way, speaking of the closing bell, as I said, okay, a monkey on a 26-mile island in the middle of the Atlantic, right, drew this line a week ago. Yes, I am speaking of myself in the third person, okay? I'm a monkey on an island. And look at this. We closed in the SPX at 53.47, just missing that 39. I mean, to me, that's not really closing outside the expected move, people. That's hitting the expected move. And there's an interesting and ironic twist to that. As I even mention it, okay, the S&Ps kind of continue to, just after that bell, to ebb just a little bit lower, like flowing just a little lower, just to, to prove the point. We're a very efficient little animal out there. So next week, the Fed's coming back. And again, I don't mind saying this, look, okay, they're going to have to be aggressive about inflation, okay? It's not about anymore what we think. You know as well as I do that Fed, they want to lower rates. They want to lower rates. They've actually got to stave off inflation, okay? We're coming closer and closer to this point where the Fed, okay, and again, this is strictly my opinion here. How do you have disinflation when markets are at all-time highs? Okay, the Fed very well and very dangerously could try to talk markets themselves down. Come in next week expecting volatility and expect an increase in VIX. I've actually got a position on exclusively in VIX. In fact, I'm going to show, for those of you that don't have a position on early on in the week, I'm actually going to talk about how to position yourself effectively in the VIX just in case we do get rocked. Okay, have no illusions. That CPI, if it comes in hot, right, consumer inflation, if it comes in hot next week, oh, it's on at that point. It is on. That's when volatility could absolutely explode. You've got CPI, you've got Fed, but there could be some dramatic positioning prior to those numbers coming out on Wednesday. Expect it. All right, the last, but definitely not least, we go to the SPX, the mother of all products. As I was saying just moments ago, bringing up the SPX, okay, it's Friday. And on a Friday, I wait till 15 minutes after the cash close. Okay, we're only 2 minutes after the cash close, but I wait 15 minutes after the cash close, and I will draw expected move. The expected move right now, and again, this is not like some number I'm, pulling out of a hat over here. The expected move right now, okay, is somewhere right around here. It's right around $75 higher or lower. Why is that important? Okay, the 75 to 100 day moving average, okay, is right around 75 to 100 day moving average. Okay, it's right around $75 higher or lower. Why is that important? Okay, This last week, we had a $62 expected move. And I'm going to tell you why it is kind of important, because we rallied this last week. And as you go higher, you expect implied volatility to go down. Implied volatility is not, in fact, going down for next week. Implied volatility is actually going slightly higher. So it's a bit of a catch-22. You expect implied volatility to go down because we rallied. Yeah, but the whole marketplace knows that there's CPI and Fed on the exact same day. Okay, double your fun for Wednesday. I live for weeks like this coming up over here because, again, I think it's high time for the Fed to actually get things in gear. You got the Nvidia squeeze, okay, which very well could be dead. You've got CPI. It's just one catalyst after another. It's chocolate-covered hand grenades being thrown into the marketplace, and people, I like it. Cap off a little bit of Fed talk in there, and Jerome Powell. Okay, what could possibly go wrong? Again, what could be a very volatile week ahead of us? Be aware. Again, there is a fairly dramatic expansion in volatility being priced into the SPX. With that, thanks everybody for joining us here at TheoTrade. Have a wonderful weekend. Bye-bye.